I am joined here on Crypto World with Matt Hougan, the Chief Investment Officer for Bitwise Asset Management. Thanks so much for joining me today. Let's start off with the big news. We've got Biden announcing an executive order on crypto regulation. Lots of digital currencies rallied after that announcement. What's the temperature in the room on this? Are these forthcoming rules bringing welcome clarity, or could new guardrails actually be a bad thing for an industry that is still very much in its early days?
Oh, thanks for having me on, and that's a great question. The executive order is the signal that we're entering a new bull market phase in the crypto market. I think it's that important. The big question coming into the executive order was whether it was going to be balanced, whether it was going to talk about both the risks and the opportunities of crypto. Based on our initial read of what's in there, it does exactly that. The crypto market needs better and clearer regulation if it's going to go truly mainstream, if it's going to go from a $1.5 trillion industry to a $15 trillion industry. What we got here was sort of a shotgun start, telling all regulators to push that forward, do so in a way that protects investors, but that doesn't, throw the baby out with the bathwater, that keeps the economic development here in the U.S. I think it's pretty close to the outcome we were all hoping for, and that's why you're seeing markets rally today. And I suspect that rally will continue, for the rest of the year. I think it's a really important moment.
So the Biden administration wants to explore a digital version of the dollar, which comes as China leads the charge on its own central bank digital currency. And I'm wondering whether you have any thoughts on the U.S. potentially getting into CBDCs.
Yeah, well, I think it's inevitable, right? The way money will move in the future is on blockchain. So it is inevitable that not just the US, not just China, but every major government is going to introduce a CBDC. Now, I think there are pros and cons to CBDC, right? There's significant privacy concerns, but there's also significant efficiencies and potential financial inclusion elements. So pros and cons. As a crypto investor, though, it's simply a net good, right? Because it acts to bring more of the crypto environment inside a regulatory framework. And it also will teach individuals about using crypto assets in their day-to-day life. So I'm mixed on whether CBDCs are a great thing for society. But for crypto, I think they're a major milestone, and I do think they're inevitable.
Sam Bankman-Fried and Michael Saylor have both said on Crypto World that the lack of regulatory clarity is what was keeping crypto prices under pressure in recent weeks. Does this executive order provide the regulatory clarity that investors had been worried about? And do you think that this order from President Biden will help facilitate a longer rally?
No, it's exactly right. Bitwise, we serve financial advisors, and we talk to thousands of them over the course of the year. And when we did a survey of them in December of last year, we asked what's preventing them from allocating. And it wasn't volatility. It wasn't concerns about valuation. It wasn't not understanding what crypto and blockchain was. The number one thing they said was the lack of regulatory clarity. Now, we haven't gone from 0 to 100 on regulatory clarity with this executive order. But we have done is go from 0 to 1. We've taken the first step to establish a true regulatory regime for crypto. And look, if you believe in the underlying technology, if you believe it's as disruptive as all crypto investors do, you want to see the regulatory safeguards exist that allow that technology to express itself, that allow it to affect not just a little part of society, but all of what we do every day, of how finance works, of how the web works. So I do think this is a signal moment, and I do think it sets the stage for a bull market that could last at least through this year and potentially beyond. I think it's a really important development.
Generally speaking, Bitcoin has been faring better than the market since the conflict in Ukraine began. Meanwhile, tech stocks are getting crushed. So I wonder what's happening here.
Yeah, well, one thing we've learned from the conflict in Ukraine is the value of decentralized services, right? Crypto kept working, even though the financial services in Ukraine faced challenges. So the world is realizing that the traditional monetary order is changing, that decentralized services are valuable. It's not surprising to me that Bitcoin and other crypto assets are rallying on this fact. You also, with Bitcoin specifically, the conflict in Ukraine has made the inflation fighting effort by the Fed much more challenging. And of course, Bitcoin, one expression of Bitcoin is as a hedge against inflation. So both of those have aligned to support Bitcoin. And I think, put a major catalyst behind people realizing the value of decentralized services.
Another market dynamic that I wanted to ask you about is, since November, Bitcoin and other cryptocurrencies have very much been moving in lockstep with equities and bucking the meltdown that we've seen in commodities. And I wonder, why do you think cryptos are more closely tied to market performance at this stage rather than global commodities?
Yeah, I think it's a temporary impact. I think what we've seen since November is that risk on, risk off has dominated market dynamics, right? The Fed moving from easing to tightening. Individual corporate performance didn't matter. It affected stocks, almost across the board. And within crypto, it didn't matter as well. It overwhelmed the secular trends that are powering crypto's development. I think it is a temporary phenomenon, though. Eventually, those risk on, risk off factors net out, and we start to see the true drivers of crypto begin to come to the fore. So that's an example of what's happening today with the executive order. It's changed the nature of the game. That's specific to crypto. And you're seeing crypto move, although in the same direction as stocks, because the market in general is risk on, at a much larger beta, right? Much bigger moves. I suspect the correlation between crypto and equities over the rest of the year is going to come way down. These two asset classes aren't fundamentally correlated. The underlying drivers of them are fundamentally different. But during these periods when the market is just focused on, risk off, you can see these short spikes in correlation. I do think it's temporary. I think we're almost past it, and we're likely to see lower correlations in the future.
We've been focusing a lot on how the biggest cryptocurrencies by market cap, your Bitcoins and Ethereums of the world, have been responding to the conflict in Eastern Europe. But what about altcoins more generally? What's your take on the performance of non-Bitcoin Ethereum tokens this year? And which ones are you watching specifically?
Yeah, I think you want to think about two kinds of tokens in this current market. You want to think about tokens that benefit uniquely from the developments in Ukraine. And you want to think about tokens that were doing exceptionally well, but who's been pulled back by the conflict and the risk off move. And there's actually a token that aligns perfectly with both of those things, which is Luna. Luna is the sort of shock absorber for the Terra ecosystem and the Terra stablecoin. It was one of the best performing assets before the sort of risk off move, before Ukraine. And it's now one of the fastest rising assets after it. I think part of that is just it's got a strong narrative. But the other piece of it is the world has realized again that decentralized services matter. The stablecoin market is growing exceptionally fast. Most of it is relatively centralized. It's stablecoins like Tether or USDC that have cash reserves in centralized deposits. But there's another section of the stablecoin market, which are algorithmic stablecoins. Luna backs one of those. Another is Maker, which backs another one. I think the world is going to realize that algorithmic stablecoins that don't have a centralized point of failure are an important fundamental tool in the crypto and DeFi market. So I expect Luna to do well coming out of this. I expect people to rediscover Maker coming out of this. I think those are very well positioned for the market that we're entering today.
Coinbase says that altcoins made up 68% of trading volume in Q4, the highest percentage yet for the exchange. And it does seem to reflect this shifting focus to other investments to protect against Bitcoin's volatility. Do you think that this is where retail trading is headed?
I think most investors are still best served focusing on the largest assets, right? Most investors are still on the sidelines. So they do well to own some Bitcoin and some Ethereum. But one thing that's true about this market is the sort of explosion of narratives that are out there. It used to be, crypto was about digital gold or peer-to-peer payments. Now it's about DeFi, it's about NFTs, it's about the metaverse, it's about Web3. What that means is we need more blockchains, we need more crypto assets. They all participate in these different segments. And because I don't think that genie is going back in the bottle, because I think we're going to see more and more applications, I expect sort of that Cambrian explosion of interest in altcoins to grow. We're seeing why those altcoins exist. We're seeing why we need Solana next to Ethereum. We're seeing why we need Uniswap as a critical app in this ecosystem. So I don't think we're going to go back to the days of really focusing on one or two assets. I think they're going to be 10, 20, 30 assets that people pay attention to.
Last question for you. What is your end of year outlook for crypto? Do you expect Bitcoin to reach new highs? Do you think it's a better year to be an altcoin holder?
Yeah, first of all, it's bullish. We're now past the executive order point. I still think we may have to get through a little tax loss selling around tax day, but the long-term trends are bullish. So although I can't give investment advice on a personal basis, I'm looking for all new all-time highs for market capitalization in crypto in general. I think you have strong narratives supporting Bitcoin, right? The world is in a dangerous place. Bitcoin is a valuable alternative hedge and alternative payment rails. I think you have strong narratives supporting Ethereum. And then I think you're going to see other sort of layer 1 and layer 2 solutions, whether it's Solana or Polkadot, or indeed we talked about Luna. I think those are going to come to the fore. So generally bullish. I expect us to hit new sort of market-wide all-time highs. And I think you'll see multiple crypto assets do well in this